Little, and this is your weekly TA wrap, where we take a look at these markets from a neoclassical perspective and ask ourselves what happened last week and what might it tell us about the coming one. I do the show once a week, every Sunday night, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. Folks, I always enjoy your questions. I see a question here in the chat room. You can certainly type in there. You can text me 303-912-9110, or you can send me email tat@tatoday.com. Any of those means, I will try to get a hold of what it is you're interested in and then try to answer any questions you may have about stocks, about the general market, about anything I've written, which is what the question over here tonight is. As far as the markets, what happened? Well, we've been looking at a market that had this intention probably to bounce, and I believe I outlined that reasonably well last week, said that I expected a bounce, that we'd probably get one. I didn't expect another V-shaped move back to the top side, but after about 15 or 20 of those, you just kind of get to where you are not surprised when that's what happens. The Dow Jones was up 111 on Friday. If you remember, on Thursday it was up about 300. So you've tacked on about 400 points in 2 days. In general, you've tacked on about 3% across the board. I would expect you get some sort of a pause as a result of just the fast move. Now, that sort of a pause typically is what sets up an ABCD structure on the way up. The real question, as has been the case for a while, is what are they going to do in Washington, and what exactly is that going to cause with respect to how these markets trade. So if we pop over and start looking at the charts, I'll start with the dailies and we'll move over and look at the weeklies as well. Here's the big shot off the bottom. You got into that's 918 bar. That was a big bar. Volume there is about 39.8. You go into it, you only got about 29. So you can see the shot up doesn't have the volume, but you know you got into the bar. Now, if you stay into it a bar or two, you're probably going to try to reach the other side. So that's really the question. And then the resistance zone now has redrawn to use the big bar down off of 920. So from about 1708 back to what do we got here, about 1705, about that 3-point range is the next resistance zone. What we've had over and over for probably about at least 2 weeks, probably 3 weeks, is mixed signals. And when I say mixed signals, you can see over here in this particular case the S&P retest regen that was going on. This is on the weekly. You did 169.2, bottom was 1681. You went into it 2 weeks back, you did 158. Last week you did 161. Again, it was 169. So you're pushing it. You don't have quite enough volume to break it down. If you compare it to the breakout bar, you definitely don't have enough. That's 186. So as it comes back and touches into support and does the retest regen, you get underneath it twice and you close over it. That says on the weekly basis this thing wants to try to go higher. But again, coming back here, you can see as you're going higher and what you're coming into, you don't have the actual volume you want to see. So it's kind of a mixed picture as you go into it. The other piece of this, if you remember when we came down, we were testing into this bar. That was the top of the high volume wide price spread bar at the bottom. The volume when it was 32, we came into it with 35. So we hit the bottom with more volume, yet we bounce. And we'd already finished off ABCDs down and everything. Now we come moonshotting back the other way, and we don't have the volume as we go up. And as I'm sure you're aware, the 2-day wonder really was a reflection of expectations that the budget crisis would be resolved, and certainly the debt crisis, the debt limit ceiling would be raised. And from what I saw before I came on air here, The senators that were working on that didn't actually get that solved today, and I did see that the market was trading down about 0.75% at one point. I think it's down about 0.5% now in the futures. So we're probably going to see some sort of a pullback just as a result of the big shot up. The question is how far does it come back, and what does it come back into? If you're coming back and you're measuring something, what you want to measure is what would have been first resistance on the way up, which was the top of your 10-8 bar and the top of your August 15th bar. So that's kind of a little range on the way back up. You can see support actually draws in a little bit lower. That would be the first area I'd look to see what kind of test you get back into there on the daily. If we pop over and look at, now that's one of the weaker ones, right? The Dow is actually the weakest. This one has struggled mightily. It's a huge range now at the top. If you pull it over and look at the weekly, you can see it very clearly. Big range is set up. Because you got underneath this, that makes this swing point low the low. You didn't get 6 bars on the prior one. So that means that to break on an intermediate term time frame, you got to come down much deeper. 14.55 is the number down there. That's your June 24th bar. But you can see the large range is set up. It doesn't look that large on the weekly, but if you get over here and look at the daily, you can see it. Big shot off the bottom. Nice test on the bottom, less volume. Now on the weekly, you had a test as well. So let's go back over and look at that first. So the test of the lows. So it wasn't a retest regen like the S&P on the weekly. This was actually a test of the lows. The low bar, it was testing 14,760. Volume there was 4.19. You came back at 4.77. So you actually hit it with more volume, yet you bounce anyway. The support zone over there actually has these anchors that are much bigger. That's really where the test was coming, not this low. So the test was back into those two big bars. And when you look at the volumes over there, 9 and 7.7, you can see you don't have the volume to break it down, and that was a big piece of why this thing turned and ran as much as it did. Now that's the two weakest ones. If we go over and look at the stronger ones like the NASDAQ Composite, this one was also doing retest regen. Now when I said mixed signals earlier, what I was referring to in particular is this had more volume than the breakout bar and any of the 3 swing point highs that was testing back into. But the fact that it was more than 6 bars, as I told you, you can almost buy those things blind. Just close your eyes and take a shot, because they almost always go back up on the first test. The thing that you don't know is how far will they go. Of course, this one went much farther than I would have expected, and probably you did. It's always all the way back up here trying to test a high. So the big bar now is this September 20th bar. Top of it is 37.74. We got as high as 37. We closed at 37.91, and that was the low of it. 37.98 is the high. So we closed about 7 points under it. Again, not as much volume, not as much volume as where the resistance was, yet it gets over it in price, and when you get over it, you can keep going. Now that it's into this bar, a good piece, you got to think it's going to try to get to the top of it before it's done, and that is where the resistance zone is. If you look at it on a weekly, it still hasn't even came back to even test the support area, just mild consolidation up there in that area. On the NDX looks the same. On the weekly, you can see the consolidation up there looks pretty much the same. It did get back deeper, and volume was reasonably heavy as it came back into support. On the daily, same thing. You come back, volume expands, you come into swing point highs, so forth. Doesn't matter, it holds, flips back around. Also, it's got the big bar here on the 920 day. That's 32.48 is the top, and this number's 32.33, so 15 away. So can it get up there, and what does it do at the final attempt to get over the highs one more time? What I would look at this as, assuming that the fact that they haven't reached a solution to the crisis, which is what drove these things the last 2 days, you have to think some sort of a B leg a B point here, a C leg down, to create a C point, and then an ABCD structure potentially back on the way up. Now you could view this the other way too, and that is that you have an A point here, a B point there, a very high C point, and then potentially an ABCD down, and that's true of all the indexes, even the Russell. And we'll go to it next. The Russell, almost to the top, it still could have an ABCD structure on the way down, but it just wouldn't matter much. This one had broken the swing point highs at the top. It already retested those. Remember, the retest regens had already taken place. So it was coming to the next one that had not been tested, which was here. That high, 1044, we got into it. 1037 was the low. Volume is 357 going into 243, but the breakout bar, 369. So 369, a little bit heavier, turns around, heads back up. So it was a good test. So in almost all these cases, with a couple of small exceptions, you actually had, not small exceptions, with a couple exceptions, you had a lighter volume on the Russell, you had it on the SPX, you had it on the Dow, although they were different types of tests, the Dow was. On the IXC, the NDX, you had more volume, yet you flipped it around anyway. This one wants to try to test the top. There's really nothing to stop it now. So this Russell is typically the strongest index in the fourth quarter. The small caps typically find the best gains in the last 3 months. So the small caps should be the ones that break out first and give us a clear indication if they're going to keep going or not. That's the ones I'd be watching on the breakout side. If you want to watch the weakness, you go look at the Dow and you look at the SPX and you see how they behave at price points where they should fail or find support to give some indication about what they're going to do. I'm probably not going to go through all of the major sectors here tonight. I'll point out a couple things as I go through, and then we'll just kind of leave it at that. All of these have the potential to set up ABCDs down. I mean, they're not going to be large if they do, or they could set up ABCDs up after a retrace. So again, the handwriting up or down just isn't on the wall. It can go either way. And that's true here. Although the SMHs are almost at the highs, you really can't say they're going to do an ABCD. They're just consolidating. But like the XLB, that could be another ABCD down just as well as up, depending on how the next couple days play out. And you can see it in all of these. You could potentially have an A point here. Let me see. I don't know about this one. This one really doesn't have it, but a number of them still do. So sector-wise, sectors don't look bad. I mean, I flipped through these and looked at them. They all came off the bottom the same way. They all shot back up. Most of them don't have the volume. Like here's the XLV. You can see the volume tailing off as you're going back up into resistance. Same thing on the XLU. So most of them are finding the buyer stepping away. Now, if you remember it was about a week and a half ago when we were back into this area and we were trying to come back up, I talked about these two bars at the top, right? And so in this particular case, it's the 18th and the 23rd. The bars, those two bars that sandwich around the highs in most of these charts, those two bars should be the hardest thing to get back through, because if you get through those and you can stay into them for a bar or two, you're probably going to get to the top, which means all of these indexes are probably going to go all the way back to the highs if that happens. There's a couple exceptions. XLF may be an exception. Now the XLF actually got some push, even though we didn't get much push out of the two members that reported. But again, you can see these two bars on the way up. That's what I would be looking for as these things come back up. Talking about earnings, the big piece of news this week in terms of economics is probably going to be earnings, because unless the government goes back to work, you're not going to get much in the way of domestic economic indicators. So if I go look over at the ones that have already reported, and there's really just 4 I've focused on so far, but you're going to have a slew of them this week. There's probably 80 or 90 S&P companies this week. Costco was one that reported first, came down, volume expands, right, but it holds. Even though it tests with a lot more volume, it holds and bounces. Back to resistance now, volume's tapering off. This, most people would look at this and say this is a great looking chart. If you get a pullback and it holds, I guess it could work. To me, it looks like a big range trade. Fastnell was another one. This is industrial. The only reason I look at it is because it's one of the first ones that report. You'll get some other ones this week that will give us a better indication, but it came down with volume, got a little bounce now. It's going to fail, flip back around, come back the other way. JP Morgan and Wells Fargo reported on Friday. Both of them ended up about flat. JP Morgan actually was pushing back towards the highs with volume. JP Morgan actually go test those highs, but it really didn't get any push as a result of earnings. Wells Fargo reported better earnings, but the revs were down again, and that put the stock down about 2% to start the day, but then it rallied the whole day. And actually, it actually started up, went all the way down, and then came all the way back up, given the dark candle. But JP Morgan, that also doesn't look particularly good. This can still trade back down just as easily as it could potentially trade a little higher. If it trades higher, it's going to have to get over this resistance zone. Of course, it has good support zone underneath it. Multiples, 3 of them down there. Okay, let's look real quick at the OX sectors, see if there's anything interesting there. I didn't really go into the bonds and so forth. Let's take a quick look at them. So let's start with the dollar. Dollar had tried to push higher. It's still holding this little gap. Remember, it had good volume on Thursday, which was kind of an anomaly. Yeah, it looks like it can still hold and try to push again. Let's see what the euro looks like. Now the euro failed into resistance. So dollar may try to push a little bit more. Bonds though, let's see what bonds are doing. So even though there's all this worry about everything going to hell in a handbasket, the two indicators that kept telling us that some sort of deal would probably be reached was the dollar and the bonds. And the bonds are struggling though. I still think these bonds are going to come deeper. Now, if that's true, then I wonder if we're going to go to the 11th hour before we get a solution. So, the debt limit, which takes us down into Wednesday night, Thursday. If so, bonds trying to push lower may end up being a nice buy down in this area. And equities would probably push lower too if that's what happens. You see if junk bonds are telling us anything. They're more closely aligned with the equities. Well, they sure as heck don't look like they're worried, do they? As they keep pushing up. And they're going to get up into resistance. You would think they'd fail there given the volume trails on the way up, but it's not clear. Gold got spanked Friday, down huge, gaps down, gets under the lows. Let's look at it here on the weekly. Okay, so the big bottom bar, wide price spread had volume, 124.70. You close 122.60, so you're into it reasonably deep. If it doesn't get right back out of it this next week, then you got to think it's going to try to get to the bottom. So I wouldn't be sticking my hand in that cookie jar yet. And let's see if silver echoes. Silver's been stronger. It's got a little bit more industrial commodity component. And it's trying to hold this 2048, and did. So silver's not giving it up yet. So that's a positive for the market, for the precious metals. One quick look at JJC. I saw some Chinese numbers that came up a little weaker than expected a while ago. This one doesn't look too bad. Still, remember this had broken down from this prior range up here, come down here and create a range in this area. So now, until you can get back up into the higher levels, you're kind of wallowing in another range down here, and that hasn't changed, although the volume trails look pretty good on it. So JJC looks like it's going to continue to bang up against this top before it's either gives it up or gets over it. Okay, so that's most of it. Let me take a couple of questions. I had one texted to me. Let me take that one first. Let's see what this one is. what is this? SM Symantec, it looks like. So let me go see what Symantec looks like. I'd started pulling it up right before I came on the show to take a look at it. So the question was, can I take a peek at it on the weekly? The MTTF is extended on the weekly. Would that be enough to keep you out? MTTF I haven't talked about lately, but it is an issue, right? And MTTF, and we're on the weekly here. Here's the trading cube, which has the MTTF. On the long term's bullish, not that heavily. Pretty nosebleed on the intermediate term, 85%. This is cumulative probability of a failure. So it's telling you the larger this number gets, and the biggest it can get is 100. The larger it gets, the higher the probability that you're going to have a trend transition. And then you're bearish on the short term. So if we look at it from that perspective and ask ourselves, okay, how could it get a trend transition? The only way it can do it is to break a swing point low. Well, the last swing point low is here. That price point is 23.74. We traded as low as 24.16, so we almost got there. The bottom of the big breakout bar, it's a wide price spread bar, but it's not high volume. Low of it was 24.04. It broke this swing point high, which had a lot more volume. As you come back into it, you're testing with lighter volume. That usually sets up some sort of a bounce. Now, if we flip over and look at the daily to see what that looks like, so you had a low with about 8.5, you tested with 7, you tested with 4, so that's what led to the bounce, right? You test, you can't break it, so you start getting a bounce. Look at the bounce here compared to your general market, though. You really didn't get much. The other thing you have to look at is Symantec is going to report earnings, I think, at the end of this month, 10/28 or something. So with all these, you have to look at your earnings and see where they're coming out. So now you're testing back into resistance on the daily. 25.18, 25.60. Given the way this is trading, I don't see it getting through this area. Matter of fact, I think it's going to have a hard time getting back over about 25.18. So given that, I don't know that I want to buy it yet, and given the MTTF stretch, you know, it says it's probably going to reset, which would mean it'd have to break this swing point low, and as you can see, the bottom of that swing point high that it's doing a retest regen on is 23.54. That's below that, just barely, 23.74. I would be looking for that area as the test to tell me whether I want to get in or not. And you'd actually kind of hope this thing would drift around. Well, it's hard with earnings, right? I guess you would probably rather it go down there, do the test, and do it quickly, and tell you it's not going to break so that you could buy some. But then again, you can't buy a whole lot in front of earnings, in my opinion. I think that's, you know, that's always a crapshoot. So Symantec, I really couldn't buy it right here. I'd have to wait a little bit longer and see how it tests in the lower area. The question over here by Tommy is, in your article, how would the break of 1627 occur in your estimation, and if it did, how far down would the fast break take us? Okay, so the article that's being talked about is here. Let me pull this back over. So if I pull this over, stretch it out, you go into this article. So now it's time to begin to worry. I'd written a series of articles 2 months ago saying, quit worrying about a crash. It's not going to happen. The structure's not there, right? And so in this article, I went back and laid out that structure again. And then I talked about that particular day that we were getting low, so Wednesday, before we got the bounce, saying that I think we'll get the bounce. And if we get the bounce, you know, I would probably lean short into the bounce, start hedging as a result of it, because the structure is in place now to break on multiple time frames. And what I'm talking about is you have 2 swing points here on the daily chart on the S&P, and you have one now that coincides with this one on the weekly. And when you get that sort of a structure, and now we'll pop back over to the current charts, when you get that kind of structure, if you break, typically what happens is that break leads to a fast move in the direction of the break. What it doesn't tell you is how far it will go. It simply says that more than likely it's going to move fast, and it's going to do it, and it's going to do it to the side of the break. In other words, if you break lower, you're going to go lower. Typically, the lower ones tend to extend pretty well. You don't always get that on the way up, but you also have pretty good probability of it. The real key is that probability of that trade is very high. So there's two parts to your question. One is, how would we get back down there? Well, first of all, I didn't think we were going to bounce this far. So it's going to be harder to get down there, and it looks to me like it's going to take longer to get there. But then again, you know, what drove this market up could drive it down, and that is that you don't get a resolution, and it does look like we're going to default, or we even do default. You could get a fast move down on something like that, and if you did, that's how you could get this break still, even with this big bounce. If we don't get a fast, you know, if we don't get some sort of a quick rollover here like tomorrow that carries, it's going to be hard to get back down there. What I do think is possible is that you could be setting up a larger range that eventually comes back down there and breaks. But that would be farther out. To get it within the next week or two, you'd have to get some sort of a debt crisis that really materializes. And I don't know if the politicians are that stupid or not, but you know, maybe they are. Maybe that's what will happen. That's news flow, and that you can't predict that. You just can see the structure in place to allow it. The second part of your question is how far it would move. There's really nothing that tells you how far it would move, but what you do is you go over and you look to see what's below it. In this particular case, the next swing point low and the next bars that I see with big volume on them and wide price spread, reasonably wide, that coincide with something else, as they do in this case, is probably down in this area, and that probably, what is that, about 1588, and the bottoms of this 1577, so somewhere down in that area. I think you could get a move that fast. So 16, if you did get it from 1627 or so down to 15, let's just call it 1577, that would be what, 50-point move? That'd be a fairly fast move too if it happened. So I think you could see a move within a week to 2 weeks. That's 1 to 2 bars. Take you down that far. Okay, I'm running out of time. I got to your questions. I don't see any more questions here. Let me check my email right quick. And I don't see any questions there. So I'm going to leave it at that. This market is news flow. There's still mixed signals even after this huge bounce. I wouldn't just assume that we're going straight back up in a V shape, but at the same time, I wouldn't say we can't, because we've seen it so many times before. The more likely case is some sort of a pullback that then creates an ABCD structure on the way up if we're going to go up. And what you have to do is watch SPX in particular on the way down and watch the Russell on the way up. Those are probably the two tells that would give you a decent indication of what's happening. So that's where I'd probably be paying attention. As always, I thank you for tuning in. Take care of yourself. Until next time, I'm L.A. Little, and this is and was your weekly TA wrap. Have yourself a great night, and I'll see you tomorrow. Take care. Good night, all.